Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bolling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello. Ginny Bolling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments, where we help investors build wealth and income through commercial real estate that also improves communities. And today we have Chad Ackerman with us. Chad, thanks for coming.
Hey, Jeannie, thank you for having me on. Really excited to be talking to you today.
Me too. I'm so glad we met.
Yeah.
Was going through with you some of our common contacts, and you have quite a background too with the things you've accomplished. So I'm going to read your bio. You listen for things you might want to add, because there's probably some updating you need to do, but yeah, hold tight. So
Sure.
Chad is the founder of CARE, which stands for Chad Ackerman Real Estate, where he coaches successful professionals who are new to passive investing. With over 30 years of corporate leadership and the proven tools of focal point coaching, Chad combines real-world business experience with personal investing lessons to help clients create time freedom. After starting to invest passively in real estate in 2018, Chad built multiple income streams, liquidated his 401k, and ultimately left his W-2 career. He co-founded Left Field Investors, which grew into one of the nation's fastest growing passive investor communities and was later acquired by BiggerPockets, becoming Passive Pockets. Through CARE, Chad helps accomplished professionals unfamiliar with passive investing gain clarity, avoid costly mistakes, and take confident action. His approach focuses on clear strategies, personalized guidance, and accountability, helping clients align their investments with what matters most. A sought-after speaker, coach, and community builder, Chad shows people there's a better way to live than trading all their time for money. Very good. That's an excellent.
Thank you. Thank you. That sums it up very well.
It doesn't say anything about you personally, though.
Well, that's fair. That's for the conversations.
Okay. Well, so where do you want to start?
What do you want to hear? Journey? What I'm doing
Touch on journey a
now?
little bit. I do want to talk about how, because I think it's interesting how getting people that are busy with their careers to understand that they really can do this
Yeah.
very easily. And so that's, I think, an important one that you specialize in, and it'd be crazy not to spend more of our time on that.
Yeah. No, that at the end of the day, as I started developing CARE and even developing Left Field Investors, I realized that my target audience was me. I lived this. I was a corporate W-2 person for a long time. I was looking for another income stream, another way to build some security that was passive. That I liked real estate a lot. As we talked before we jumped on, I started in right-of-way work back in the early 90s, so quite a while ago. So real estate was always there, was always part of my life, and I was intrigued by it. But as I studied it, I'm like, I watched my friends that were flipping houses that were just busy every night, every weekend. And I'm like, well, that doesn't seem like the life that I'm looking for. That's not passive to me. That's extremely active and so forth. And when I found the passive real estate side, it really clicked with me, and I became very passionate about that because it gave me a tool to get into real estate without the need of having to do the tenants, the toilets, the termites, that I get the benefits from it that I I just wanted to share more of that information with busy professionals that like real estate too, but were like me that just sat on the fence because they didn't want to sacrifice all their weekends. They want to go to their kids' soccer part or games and attend different things, not be dealing with a rental unit all the time or multiple of them. That this gave me that avenue to get into that space and get those benefits. So my goal out of all this, because there isn't a lot of education about being a limited partner, was to try to give people an avenue to come to get coached on it, learn about it, try to get educated, and then turn them loose to go figure out how to invest in this space.
So you will totally appreciate. 2 weeks ago, I was at an International Right-of-Way Association event. So I had all my appraiser and attorney and land planning friends there and whatnot. And
Mhm.
I, tell them what I'm doing and that I think it would be awesome if they looked at it, and they're like, "Oh, I'm saving to get my first rental," or it's like,
Yeah,
that's going to be a lot of work, you know.
right, right.
And it's such a mind switch.
It
It
is.
really is.
Well, like I always felt like my legacy with left field when we had it, or my legacy now with care, I'd love to leave behind educational content that was coming in at the collegiate level or at high school level or something, just to start letting people know this is a tangible avenue that you could try, that you don't have to sacrifice your time. This is all about time management, really, and get the benefits of real estate. Actually, you get more benefits being on the passive side because of the bonus depreciation that comes with it than you do on the active side. So when I got educated on all that, I was like, there's no reason for me to put money into the active side. Then I lose some benefit in tax advantages by going on the active side, or I have to 1031 everything, and that gets cumbersome because of the time frames. So, that's what all intrigued me to get into the space that I'm in. And that's why I want to give back and teach people about this. Because I know there are people that were just like what I was that are sitting there today trying to scale and figure out, my biggest thing was if I started into single family, I'm like, I'm going to need 100 doors to do what I want to do. I want to replace my W-2 income. I'm going to need volume here. How on earth do I get the volume to work? And when I discovered the passive side, I'm like, oh, wait, I can invest this money in multiple asset classes that are going to do just as good for me as what single family would do with better
Better.
tax advantages, right? That I'm like,
And the time
it's a no brainer.
advantages.
Yeah. Yeah. And I get to go do whatever I want to be doing as opposed to visiting my rentals all the time. Absolutely. So I
Yeah.
want to educate people about it. I want to teach them that this isn't fool's gold. There's a lot of myths around it. You don't have to be a millionaire to get in. You don't have to be in real estate. You don't even have to be accredited. I'm still not accredited to this date, and I'm still investing in this commercial space
I bet
lucratively.
you are, and you just don't count everything.
Probably.
Yeah.
Yeah. Yeah. It's close enough, but I like to say I'm not still. It's a better story.
Well, and it's so true. So I've been in business in real estate 40 years, bought property from syndicators, never realized I could do it
Mm,
until I joined the local real estate investor group, and the commercial subgroup was saying that you don't have to be accredited. And I'm like, what's accredited? And
yeah.
and sophisticated. The law has
You're
changed.
right. Sophisticated. Yeah.
So that's what, yeah,
Yeah.
made it make sense to me.
Yep.
So yeah, I've
Yep.
been kind of screaming it from the rooftops. You should look at
Same.
this.
Same
Yeah,
thing. Yeah.
yeah.
Absolutely.
And speaking of that, what is going to be your big takeaway from this?
So it leans into that. So the big takeaway is, hey, this is a legitimate business opportunity for a lot of investors that are looking for multiple income streams. They like real estate. Come talk to me and I'll help educate you on this, get you going, get you understanding the space so that you can step into this with confidence. And, a lot of people get stuck in the analysis paralysis. My goal is to get you past the analysis paralysis so that you're comfortable to take action. Because once you take action, when I wrote my first check, I couldn't wait to write my second one. and it's scary, right? It's still scary to this day to write a check that big. But when I wrote that first check, I knew this is what I wanted to be involved in. So I want to pass that on to other people and help them discover this space and get comfortable with moving forward.
So let's explain what that means. When
Mhm.
you invested for your first time, right? Is that what
Yep.
you're talking about?
Yep.
So can I ask how much did you get in at for your first one?
So my first one, I got in at $50,000
Uh-huh.
because I didn't know that you should ask a new operator that you're working with for a discount on the minimum. And majority of them will let you in typically for 50% of what their minimum is. So I probably could have got in for 25, but I got in for 50 on my first one.
And so you write that check and then, well, back then I'm not sure. Now there's a portal system, right?
Right. Right.
So you need to set up your profile, but it's no more difficult than opening a bank account.
Correct.
And then you wire your money and the tough part's done. You've made your decision and the rest is mailbox money, right?
Exactly. Yeah, we coined it as you're an active passive investor up until you write the check. So you have to be active first, do your due diligence, get to know the operator first. You're betting on the jockey, not the horse. So trust that you know and like and trust the operator first, then study the deal. Does it meet your buy box criteria? You know, what are you really in this game to do? Are you trying to gain cash flow? Are you trying to gain equity? Make sure the deal aligns to your goals. This is my focal point work coming into play of before you get started, spend time on your goals, know what you want to do. And then you become a passive investor once you decide on, yes, this is a deal I want to get into. Here's my money. Now you sit back and you still have to be active in the idea that you're tracking how performance is going. You're reading the quarterly reports to make sure that it's aligned. You're watching your distributions to be sure they're coming in as they're appropriate should be. So there's a little bit of work, but you aren't lifting a hammer. You aren't vetting a tenant. You're just along for the ride.
Right. And so along with that, comes a certain degree of trust. You pick that jockey because you need that jockey. If something gets thrown on the field or the field changes, the downpour, rain, market changes, you want them to know what to do, right?
100%. Yeah.
So yeah, that's
That's why it's so important to get that relationship going with the operator before you invest with them. Because yeah, you're turning over all the responsibility to them. You're relying on them to know what to do the best for you as an investor and give you the best return that they can. So there's a lot of faith being put into them. So you need to do your due diligence and understand their approach and be comfortable with it.
and yet, so that's kind of like stock investing and all, but you
Yeah.
don't get to know the jockey with that. Not really, but in these cases, you usually get to meet the there's my cat, the investor, I mean the operators.
Hmm.
You can go to the property. Yep, you can do all
All
that.
those things. Yeah.
And
I
and
can't
you pick,
call Jeff and ask him what he's doing at Amazon these days. I'm not going to get through to the CEO and be able to ask.
yeah,
But yeah, in this space, yeah, you get to talk to the person that's going to drive the ship and you get to see the ship. You get to touch it. You get to go check it out yourself if you wanted to and see the property and see what improvements are you going to do. You can ask all those questions. Why are you going to do this? How are you going to do this? How many rooms are there here? Or if it's a multifamily, what is the market rents like? You can see all of that before you make a decision. You can do as much underwriting as you feel comfortable to do before you invest in the deal. So it really gives you a different avenue that the stock market doesn't. You're really taking a bet on the stock market when you can do research about a company. You can research Amazon and have a feel for what it is, but you can't see as much of the strategy that you can see on the commercial real estate side.
right. Yeah. And it's not a durable good.
True.
Yeah. For the most, you're
It's
talking, yeah,
paper.
shares. The shares are true shares, and the shares in a syndication relate to the property. So
Yep.
yeah,
At the end of the day, if our property burned down and they had no insurance, we at least have the dirt to sell at some point to get something out of it. So it's
yeah,
the beauty of a real asset as opposed to a paper asset.
which is So terrible that they called an alternative investment.
Right, right. It's the
What
original
a
one, for crying out loud.
misnomer. Yeah.
Yeah.
But so I guess we'd be remiss. Well, first let me ask, so do you teach people how to do underwriting and how to do diligence?
So we'll get into that some. Yes,
Okay,
absolutely, because it's an important part of this. You need to
right.
understand the metrics and the ranges, so, what's suggested. All of that is very important. You ultimately, I coach them to kind of pick the metrics that you feel drive your decision making the most. It gets very cumbersome to look through the entire underwriting. You are trying to be on the passive side of things, not be an underwriter yourself. But you get a variety of people. Some want to dig into the weeds all the way to the last number of the whole pro forma. Others will have their key metrics that kind of feel right to them and understand the questions they're asking, and that's enough for them. But I want to educate them that, hey, you should know how to read the PPM and how to get through some of this material to be comfortable with. Yeah, they're not totally out in left field, pardon the pun, of what they're doing. So, make sure you can do enough on your own to feel comfortable with this. It's all about your risk tolerance. What are
Yeah,
you going to be comfortable with at the end of the day? But be
right.
educated.
And so we'd probably be remiss if we didn't talk about what the current market is and why. Do you want to take that or you want me to lead in?
Go ahead and lead in because, yeah, I don't know where it's going. Nobody knows that, unfortunately.
Nobody
But
knows that, but there's definitely stress in the market right now.
Mm,
My explanation for it is this is the correction that we needed because things had become overpriced.
mm,
We're seeing 20 to 30% discounts, sometimes 35% in some areas, which it just everything's location, location, location
it
though.
is. Yeah.
You can't generalize and expect it to apply everywhere, but
Right.
um yeah, so and like we were saying before we came on the air, the interest rates went higher faster than ever before. So yeah, I think everybody's been hit in some form or fashion.
Yeah, it's been very slow from an investment standpoint for the last 2 years, really. As interest rates rose, as distribution stopped, as capital calls started and deals went under, and foreclosures started happening. I don't think we ever saw foreclosures get to the level everybody kind of anticipated they would be, but we definitely saw losses that were taking place. It was a gut check, and there needed to be a re-education of the limited partner because in the late 20 teens, you couldn't miss with a property. It seemed like the market was so hot, everybody looked like a hero, everybody was making money on their deals. So the expectation became really high for an LP of, well, I want, 20% IRRs on everything I do. I want to double 2.5x my deals that I get in 2 years, not five. That it really, I think a lot of people paused because they were still hoping to see those kind of deal metrics for them, their performance, and they weren't there. And you had to kind of reset what your expectations were for this business, which was back to your point, a correction back to what this business is supposed to be. Mid-teen IRRs are okay. Doubling your money in 5 years is okay. That should be expected. And if you get anything better than that, that's a win. But it really has been a kind of slower process. It seems like over the last couple of years, even deal flow. It seems like I've seen fewer deal flow come through the inbox, but it seems like it's starting to pick up again. So you can never time the market and don't try, is always the advice. But it does feel like we're heading into a bottoming out here, that it's going to start maybe taking a turn. I'd like it to. It'd be great to get back to at least a more comfortable level. I don't expect it to get back to the fever that it was in the late 20 teens, but it'd be nice to at least be more reliable with what we're seeing come out of the
Yeah.
market these days. To be
Yeah.
determined.
Completely
Yeah.
agreed. All right. Well, so what are we missing? What should we touch on before we wrap it up here?
I think the biggest thing that I like to just get out to people is that, hey, again, kind of reiterate, this is a tangible place to do investing. If you are intrigued by real estate, but you can't figure out how to scale your business or make it work, without giving up all your time. Take time to look into passive real estate investing and get educated on it to realize how this works, similar to single family investing, but also different than single family investing. Take the time, get educated on it, spend the time. Like I would say right now, if you feel it's risky to invest and you're on the sidelines, then spend time on your education. That's what you should be doing now so that you're ready when you do feel like the market has shifted and you're more comfortable pulling the trigger on something. Take the time to get educated currently while you're on the sidelines. Nothing wrong with being on the sidelines. I'm on the sidelines right now, mostly because I don't have capital to invest right now. It's all deployed. But also just because I haven't seen anything come across my desk in a while that I felt excited to invest in. So go get educated, learn a new asset class if you want, talk to more operators, reach out to a coach and get a deeper dive understanding of this business so that you're prepared for when you're ready to invest in the market again. Which I'm a firm believer you can find deals in any market. So I'm not turned off saying there are no deals out there. I believe there's deals out there today. I believe there's been deals out there anytime. You just may have to do more digging and be more comfortable. So spend time on your goals, spend time on your buy box to know what you're looking for. So you can take the emotion out of investing and focus on the black and white criteria that you can create. Emotions make us make mistakes. So I like to try to help people get rid of the emotional side of this as much as you can. It's still passion. It's still investing money. It's going to have emotion involved in it no matter what. But I like to try to minimize the emotional decision making.
Let the numbers do the talking,
Let
right?
the numbers do the talking. Yep.
Yep. Good advice. Very good advice. All right. Well, so as I ask everybody, is there a pivotal person or event that brought you to where you are today or is pushing you towards something in particular?
Sure, absolutely. I would go back in time to when I was looking to get into real estate and I attended a local meetup in Columbus, Ohio. And a gentleman got up and talked about how he left his W 2 because he invested passively in real estate. His name was Jim Pfeiffer. He was running that group that we were attending, which was mostly single family active real estate investing. And I met him afterwards. He told me about that they wanted to start a club that was on passive side of things. He and I became close friends, and that club, the spinoff, became Left Field Investors. So it's been a journey to know Jim Pfeiffer and help spark all of my energy to want to learn about this space and get excited about it. He's a big element of that for me in my journey, for sure.
That's great. That's
Mhm.
great. Okay. So he's a pivotal person. So we'll talk about how to get him on the show, but maybe.
There you
And
go. There you go.
I appreciate that's really good when you can call someone and get them recognized for something they've done for you.
Absolutely.
But
Absolutely.
all right. Well, so tell people how they can reach you.
Sure. Easiest thing is go to my website at chadackermanrealestate.com, all one word, or find me on LinkedIn. I'm on LinkedIn quite a bit as well.
Great. Okay. So we'll put that information in the show notes along with any other links or whatever that you'd like.
Okay. Yep.
And very good. Well, thank you so
Great.
much for coming on.
Thank you,
And
Jeannie. Appreciate it.
yes, we'll talk again soon.
Absolutely.